Hi there, welcome to Kneppyinvests. I thought it's time to have a look at a company called Rectifier. This is an EV play because they do produce and manufacture charging modules or EV charging modules. And I actually have known about this company for about 8 years. And if you go back 8 years ago, the share price was about zero point 0.2 cents. Now it's significantly higher than that. And over the past, we'll say about 5 or so years, this company has released a few really interesting announcements, and the market gets really excited about these announcements. In fact, we have seen the share price rise in one day over 100% because of these announcements, because they are or do manufacture charging modules for EVs. So I think the market understands that this company, what they manufacture, has significant tailwinds behind it over the next 5, 10, 20, 50 years even. Now, in saying that, what this company does actually manufacture, is fairly competitive. But a few of the announcements this company has released in the past year are really interesting in regards to the contracts or the amount of these particular contracts. So we're talking about $20 million, $22 million. And not only that, some of the organizations they are making these contracts with in itself are fairly exciting. So I thought it's about time I do a video on Rectifier Technologies. I might have mentioned this company in passing one of my other videos, but I have not given this company a video. So this is me rectifying, not giving any time to this company. Now, for full disclosure purposes, and I might seem a little bit bullish in regards to the future of this company, but I am not a shareholder of Rectifier Technologies right now. I have never been a shareholder of this company in the past, but I might be a shareholder of this company in the future. I just don't know. But I think it might be useful to be patient, because when I show you the charts of this company, share price can be really volatile on the back of the news flow from the company. So the market does tend to get a little bit too overexcited about this company, and then that excitement wanes away fairly quickly. Now, I am excited about the future of this company, and in fact, I'm more excited about the future of this company compared to, say, lithium miners. And it's the old gold analogy. You probably have heard this before, that those people who were selling picks and shovels to gold miners were the most successful, or tended to be most successful in terms of probability. And if you looked at the gold miners, a few gold miners were highly successful, but the vast majority of people who went out looking for massive amount of golds were not successful. And it was those who were concentrating on just selling the picks and shovels to the gold miners who ended up being highly successful. And I look at this company in a similar vein. Now, it's not an exact analogy, but I think there is higher likelihood that Rectifier Technologies will be successful in the long run compared to any random lithium company. Now, I've already mentioned that Rectifier Technologies manufactures EV charger modules. So they actually do manufacture quite a few, and this is one of them. And that's the whole reason I've decided to just show you this one, which is the RT22 50 kilowatt EV charger module. And it'll become clear why I am just showing you this particular charger model. Now, Rectifier Technologies do a little bit more, but their main focus is on manufacturing EV charger modules. And that's really all you have to know right now. Now onto some charts for Rectifier. First chart we're going to look at here is the weekly chart, going back to 2013 when I discovered this company. But back then, unfortunately, share price was really struggling. And because the share price was really low, say between about 0.2 and 0.5 cents, there was a lot of pip traders in there. And that's the main reason, even though I was fascinated about what this company was doing and the potential and promise of this company, I wasn't willing to take a position just because of the share price. And then the breakout in the share price happened at the start of 2015. We'll have a closer look at that breakout. Maybe it was 2016. No, it was 2015, and then we had another breakout in 2016. I'll show you that second breakout in 2016. But from that first breakout in 2015, the share price of this company has been trading in this upward sloping channel, which is good news, which means over time, the share price of this company is rising. There has been a lot of volatility, times when the market is super excited about this company, and then that excitement wanes away, uh, falls away fairly quickly, and then the share price goes to the bottom of the channel. So when the share price gets to the top of the channel, that's when there's ultra excitement about this company. And that has happened 3 times in the past 6 years. Once in 2016, second time in 2019, and then recently at the start of 2022. But when that excitement wanes away and the share price gets to the bottom of the channel, that's when you should become excited about this company and maybe think about taking a position. And when it gets to the bottom of the channel, it has happened more numerously when a share price gets to the top of the channel. In fact, it's happened about 5 to 8 times over the past 6 or 7 years. And most recently, it happened a few weeks ago. In fact, it stayed at the bottom of the channel for about 8 weeks. So we had plenty of time to take a position in the company. But I think most people who do like this company probably weren't willing to take a position because at that point in time, the share price had fallen a fair bit since the start of 2022. But in the past week, during the most recent trading week, which was between November 14 and 18, the company released another positive update. I think it was another contract, and the share price took off. And the share price went to the middle of the trading range, and then we saw a lot of selling coming in. And the reason we saw a lot of selling is because there were a lot of shareholders who bought in the start of 2022 or the end of 2021 at higher prices, and they saw their opportunity to sell out. So that means there's a lot of resistance against the share price of this company moving forward. But this was another positive announcement from the company, and I think things are moving moving ahead quite promising for this company. And I think maybe now is an opportunity to take a position in this company if you do think, or if you are fairly bullish about the future of this company. Now, let's go back into time and look at the period between 2013 and 2016. Now, between about 2013 and the 21st of June 2016, the share price of Rectifier Technologies was grinding its way upwards very, very slowly. But the pip traders were excited. They were having the times of life with this gradual climb up. So you buy at, say, 0.7 cents and then sell at 0.8, then buy at 0.7, sell at 0.8, and then it goes up to 0.9. So you buy at 0.9, then sell at 0.9, 1 cent or whatever. So they were having the time of their life. And then on the 21st of June 2016, the breakout in the share price for this company occurred on the back of a pretty good announcement. This announcement is in regards to their RT18 electric vehicle charger. And they just mentioned here, it has been successfully designed into BFace's QC245 EV charger, where 3 RT18 rectifiers operate in parallel to produce 24 kilowatts. So the market got absolutely excited about this announcement. Share price rose 256% in one day on the back of this announcement on absolutely massive volume. So this brought to the end to all these pip traders, although there would have been some pip traders who were owning the company at this point in time. So they would have bought in at, say, 0.9 cents and then overnight saw their holdings in this company almost triple because the share price actually closed at 3.2 cents. So actually more than tripled from the end of closing the previous day to this day. Share price kept on going up. The next 2 trading days reached a high of 5.7 cents, which is actually lower than the share price is right now. So this was the company making announcement in regards to it really forced out all those pip traders. And then for the next 2 years, the share price of Rectifier just went sideways. It did get as low as about 1.2 cents in the middle of 2017 and as high as about, we'll say 4.7 cents during the later period of 2016. But the next major announcement the company did release was almost exactly 2 years after the first announcement in 2016. This was on the 14th of June 2018. Share price only rose 67% on the back of this announcement. But this was a pretty good announcement in regards to a product order that totaled $5 million from Tritium Pty Limited. So just remember the name, Tritium. I think it's Tritium, or maybe it's Tritium. Who knows, Tritium. But they did order a $5 million worth of 35 kilowatt high voltage and high efficiency modular power supply units for DC electric vehicle charging. Now we are up to date because this particular chart is looking at the last year from November of 2021 to November 2022. And this company has seen a fair bit of volatility during the past year, beginning on the 9th of November 2021, when the share price of this company rose 44% on no news or specific news from the company. In fact, the company was given a please explain from the ASX. Why did the share price rise 44% on significantly larger volume than normal? And the answer from the company was in regards to the Australian government releasing their future fuels and vehicles strategy, which includes initiatives to encourage increased use of electric vehicles. And that's why the market got excited about Rectifier Technologies on this specific day. But that excitement didn't last very long, and then the share price pulled back until the 9th of February 2022, when the market got excited about this company once again. In fact, the share price on this particular day rose 102% because of another product purchase order from Tritium, and this particular order was to the tune of 20 million US dollars. Fairly similar order than the previous one in 2018. It was just a bigger order. And then that excitement in this company died away fairly quickly. In fact, the share price reached a high on the day, the 9th of February 2022, reached a high of 9.6 cents. And then the share price just kept on falling from February all the way through to the end of September. In fact, the share price reached a low of 3 cents back towards the end of September into start of October, and the share price has been going sideways since then, until the 16th of November, when the company received another order, and this was actually a bigger order that totaled $22 million from another company called iCharging. Now, the name of the company is a little bit more than that, but it's a Portuguese company ordering $22 million worth of their RT22 charger modules for their Blueberry range of DC fast changes. The orders are expected to be fulfilled before the end of 2023. Now, the market got excited. Share price rose 37% on the back of that, but the share price did reach a high of about 5.7 cents, if I remember correctly. But then the selling came in, and the share price right now is 4.3 cents. I think one of the reasons why the amount of excitement probably hasn't exceeded the excitement we've seen in previous announcements is simply because there are a lot of shareholders who bought in at higher prices during financial year 22, who saw the opportunity to set out of this dog stock. So don't forget, most investors, when they see the share price fall after they purchase, automatically think that company is a dog stock because they expect the share price to rise after they bought. So all those shareholders, all those investors, and I use quotation marks for that word, all those investors in Rectifier who bought in, say, February at, say, a share price of 8 cents, has seen their holdings in this company fall away, saw the share price rise about 50% on the 16th of November, and saw the opportunity to sell out. That is resistance, and that's why we have seen the share price pull back. And that is the problem moving forward for Rectifier. There are quite a few shareholders who did buy in at higher prices, particularly those who bought into the hype on the 9th of February 2022, and those shareholders have to be wiped clean out of the system before we see the share price significantly rise from here, unless the company keeps releasing really positive announcements. And that is a way we get rid of all those negative shareholders who do own this company right now. Now, let's have a look at the financial year 22 results for Rectifier. This is a business. This is a business that is profitable. In fact, at one point, they were issuing dividends, if I remember correctly. This was maybe a year and a half ago. Anyway, the share price at the market cap at 4.3 cents is $59 million. Doesn't seem too high for a company that has significant or potential significant tailwinds behind them over the next few decades. Financial year 22 revenue, 14.8 million. Profit, so this company is profitable by 492,000. So you might laugh and say that's a fairly small amount, but at least it's profit. It's not loss, or this company is not loss-making. However, they were operating cash flow and free cash flow negative for financial year 22. That's not necessarily a negative thing, particularly if they have significantly increased the inventories, or if they had significant changes in their working capital. That could mean the simple reason why the operating cash flow and free cash flow were negative for financial year 22. Now, one of the negative things an investor might say, particularly those who are absolutely obsessed with tech companies, those software-like companies who have reliable revenue, is that Rectifier Technologies revenue will be quite lumpy moving forward because of these contracts. And there might be one year here and there where revenue will be quite low because of the lumpiness in this particular company. Now, if we look at the revenue history for Rectifier, it hasn't been going up in a straight line. In fact, there was a long period between 2012 and 2018 when revenue was going absolutely nowhere. And then, of course, in 2019, we saw a massive increase in revenue, more than likely on the back of some significant contracts. And then revenue since then has gone sideways or even down. So that is the main problem with Rectifier Technologies, is their revenue will be quite lumpy. It wouldn't be surprised to see Rectifier to have a really good financial year, maybe revenues dwarfing what this company have seen in the past, but then the next year revenue will be significantly down. So you might see a lot of volatility in the share price because of that. The other thing I've included here is gross margins, and this is the metric I'm going to be closely following this company for a while, because I want to see gross margins increasing through time. That would tell me that the product they are manufacturing, the charger models they are manufacturing, are really well liked by the end user, and they're more willing to pay a bit of a premium for those charging modules. At this point in time, we can't really say what the gross margins are doing. They're really going sideways over the past 10 years, but right now they're hovering around about 62 to 63%. Now to the financial health of Rectifier Technologies. And to get a quick gauge of the financial health of the company, I'm just going to look at the balance sheet. A simple look at the balance sheet. Now, in most of my financial year 22 result videos, I don't really show how I look at the balance sheet. I'm just looking at the cash flow statement, maybe looking at the reconciliation of the cash flow to profit, but I very rarely show you a balance sheet in a video. But I always, in real life, I always have a look at the balance sheet. And there are a few things I look for. First thing I look for here is cash and borrowings. I want to see if a company has any cash. So for Rectifier Technologies, that is $7.3 million. And then I look at borrowings. And in the current liabilities, they have $1.1 million of borrowings. In the non-current liabilities, $4.2 million. So they have $5.2 million in borrowings. But right now, the company is net cash by $2 million. The other things I'm looking for here are any significant changes in trade and other receivables, inventories, and trade and other payables. And for Rectifier Technologies, there have been significant changes and increases in inventories, up $4 million from last year, and also trade payables, up $2.9 million. And those changes affect working capital. So they are changes in working capital. And they can explain why this company was operating and free cash flow negative for financial year 22. And one of those significant reasons was Rectifier Technologies have built up their inventory levels during the financial year. Another thing I like to look at when a company releases their financial year results, or even half year results, is a breakdown of the revenue into their different segments or divisions of the company. Now, most companies will provide this, if not all companies, will provide this breakdown in the notes of their financial statement. For Rectifier Technologies, that was note 4. Some companies will provide this information in a presentation the company releases to the market. Rectifier Technologies did not provide a presentation, so you had to find this information yourself in the financial statement. And for Rectifier Technologies, they have broken down their revenue into 4 different operating segments or divisions: electronic components, industrial power supplies E&D, which is electricity generation, distribution, and defense; industrial power supplies T&T. T&T is transport and telecommunications; and industrial supplies EV, which of course is electric vehicles. We're going to ignore the eliminations and corporate because that did not provide any sales to external customers. And if you look at the revenue or the sales for each of those segments, by far the biggest segment is industrial power supplies for electric vehicles. $10.8 million of sales to external customers out of a total of $14.9 million. The other thing to look at here is EBITDA, so we can see the margins of these different segments. And even though industrial power supplies EV was their biggest segment in terms of revenue, when you look at the margins, surprisingly not that high. So maybe this EV segment hasn't as much or hasn't the high margins that I might anticipate. But all 4 segments had positive EBITDA in financial year 22. One thing I like to look at is a breakdown of the revenue into different geographies, particularly if a company is global. And Rectifier Technologies have done that. They've broken down their revenue or their sales into different geographical regions. And by far, the biggest region is Australia, $12.2 million of revenue. Asia was next with 1.6 million. North America third with 553,000. Europe fourth with 303,000. Maybe a little bit of a concerning thing here is that the revenue in North America fell from 1.7 million to 553,000. In Europe, revenue fell from 2.8 million to 303,000. But that could be just the lumpiness this company does experience with their revenue generation. While in Australia, revenue grew, actually more than doubled, from 5.7 million to 12.2 million. That's all I have for this video looking at Rectifier Technologies. This might be an interesting EV play, particularly if you are finding the lithium space a little bit too hyped up right now. Maybe you think Tesla is way overvalued, even those other car manufacturing companies are way overvalued. Maybe you think copper is overhyped, or cobalt, or you just don't like commodities. Maybe a company like Rectifier Technologies is for you. I think this company has a greater chance of success than many of those lithium, particularly those lithium explorers. I think their chances of success are fairly low over the next few decades. So if you have any questions, any thoughts about Rectifier Technologies, I'd love to hear it. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.